This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. Welcome back to the channel. So this week we're going to talk about the S&P as we do on all Fridays. But I wanted to spend a few minutes discussing what's really the driver behind these indices, these key indices. And I like to do this on a semi-regular basis just to kind of stay on top of it because, I'm a bottom-up investor. And I'm a bottom-up technician, I guess is a better way to put it, meaning I like to look at a lot of individual stocks and a lot of stocks inside of individual sectors and see what's really taking place. And sort of like looking under the hood. And so if we do it that way, I think we can have an edge and have a better idea of when the market is getting ready to do something meaningful to the downside. So let's go ahead. I want to switch to this one chart because I just want to make sure I spend a few minutes discussing this because if you look at what this is showing, it's got the short-term, intermediate-term, and long-term trends these are the top 30 stocks in terms of market cap in the marketplace out there. And so if we're seeing the long-term trends, if we're seeing these long-term trends overwhelmingly positive, look at that. I mean, we got one stock, which is an energy stock, which is not really that negative. I mean, the longer term just hasn't quite turned up yet enough to classify it as bullish or a long-term uptrend, but pretty positive from that standpoint. All these others are green, a few neutrals, but the reality is very bullish from that standpoint. Then you go to the intermediate term and look at how many green check marks we have on the positive side here. We've only got a couple negatives. Yeah, I do think MasterCard, Visa, some of those a little concerning, PayPal, stuff like that. I actually think Disney is probably setting up as a potential buy, as a possibility. But I'm looking at this and saying there's just not that much damage being done to the monthly trends or the weekly trends. All of this is happening. What we've been seeing in terms of volatility and changes in trend has been taking place on the short-term time frame, and we will see this flip back and forth. These names, these check marks can flip over to this side, but if it doesn't have an influence on these trends, then we have to have an upward bias. So this is one of the reports I do. I delve pretty deep and give comments on all the stocks that are like the big heavyweights. I do that once a month for my rabilstockresearch.com subscribers. So I just want to make sure I covered this because I think it's important. If we're not seeing more deterioration on the intermediate term trend, especially, then I think you have to continue to look for long side trades and just continue to go through the patterns as we've talked about them. But I think that's a very helpful exercise to look and see what's going on underneath and what stocks are doing that are the biggest components, because these are really the drivers of the market. These are the stocks that are going to have an impact on the market. If they're up big, the market's got to go up. If they're down, the market's got to go down. And so they're going to play a pretty big role from that standpoint. Okay, let's look at the S&P chart. I'm going to start with the monthly, like I typically do. As I mentioned, here's the problem, and part of the reason why I wanted to go into that heavyweights chart is that there's not a significant shift this week in terms of the changes. We still have a pretty overwhelmingly bullish monthly chart. The negative is there's a little bit of air. We've got this room between where price is and where the 18-month is, and it would be very nice if this could channel sideways or, work its way back down close to that. But we're at this stage now during the course of the year. We're almost through October. We're getting into November, where we're probably going to close near the highs of the year. I mean, I'm sort of holding out on that for another week or two. But generally speaking, just the fact that we opened up near the low of the year probably looks like this wants to close near the high and be a trend year, just been up all year long. And so from that standpoint, I think, we're still in pretty good shape. If we go to the weekly, we have this deteriorated momentum condition in place. And notice what's taking place here. The MACD has not crossed back above its signal line yet. We've got one higher low, two higher lows, three higher lows now, depending on how things play out. I mean, it would have to really get crushed today for this not to be three higher lows in place. But now next week, if we were to come back down through the low of this week, we would have not only a bearish divergence, but we'd also have a pinch play to the downside. So you want to keep this in mind. I mean, I just think based on the price, sometimes it's best just to look at the tape, and the tape is good. I mean, they kind of want to own this stuff. A market, look at the daily chart. A market doesn't tend to go up day after day after day if it's getting ready to roll over. In fact, most of the time when you're in a really bullish trend, you won't close 3 days in a row to the upside. And, we had 3 down days back here, but then we've been positive over and over and over again. I think we had, 1 down day, and now we're back up again. So, there's just consistent closes to the upside. And I was kind of hoping what was going to happen here is that we were going to pull back a little bit more and get a little bit better pinch. We really haven't had a pinch play even develop, just based on how strong this has been. So got to respect that, but we are still up in the area of this prior high, and just based on what the weekly is doing, we're not out of the woods quite yet. So got to keep that in mind. I mean, we've made a pretty big move on the hourly chart, and now the ADX has moved down, but I want to make sure this is pretty clear. We've moved up, and the ADX has slowed down, but we don't really have any sellers taking place. So ADX is pulling back because the buyers are kind of slowing down a little bit. That probably sets the stage for MACD to come down towards 0 and maybe this to consolidate a little bit. But until we see sellers showing up, I don't think you can be looking for any kind of a big decline, even on the hourly chart. So, these are just types of things you got to be on the lookout for right now. There's nothing overly dramatic. There's not a significant shift from last week. And especially when we go and we look at what's taking place underneath, it's still pretty bullish. One of the things I should point out is that there were a lot more red. A lot of these on the short-term side were more negative 2 or 3 weeks ago, and a lot of them have shifted back to either neutral or back to the positive side. So, until that changes, I think, you've got to have, I would think, an upward bias. And so anyway, that's kind of where I am right now. Go ahead and post any questions or comments. We'll see you next time.